And we are live, ladies and gentlemen, from Warrenville, Illinois, here in the United States of America in a galaxy far, far away. Welcome to the weekly Monday, 11 a.m. Central Time, Kwak Brothers Real Estate Investing live Q&A. I just, sorry about that. Yeah, it's just, I have to, there we go. All right, sorry, I have my laptop open. And I was listening to myself because I gotta pull up this chat box so that you guys can all ask your questions, which you guys are all doing right now. So today, we're doing something a little different today, guys. Today in our live session, we're still doing a real estate investing question and answer time. But I noticed that it'd be very beneficial for individuals, for you guys mainly, if we had one particular topic every single week that we focused on whenever somebody's not asking a question. So typically, I know I focus on other frequently asked questions, but one of the things that I noticed and really kind of thought to myself as I was driving here this morning, and as you know, something my buddy Chris, who's behind the desk there working the technicals, something that he brought up as well, you know, what if we had one thing, at least one thing that these guys could walk away from? So, you know, even if they're watching the live Q&A, you know, not only could they hear general questions and answers about real estate investing, but, you know, at least they could walk away knowing something about one particular topic. So today's topic, as you guys can see from the title, is how to make animal balloons. So the thing with animal balloons is that when you blow on these balloons, you have to have the certain temperature of breath. No, so today we're talking about raising money, and it just so happens that it's a topic that I have started on for a very long time. It was actually my way of getting into real estate. And so when I was 21 years old, when I was 21 years old, I belonged to a lot of different real estate investing communities. And well, this actually kind of ties into the question of how did I start, you know? So I was involved in a lot of different real estate investing communities, and I probably met with, I'd say probably around 1,000 people a week, if I were to say so, in terms of people that I met on a weekly basis. So there was a large group on Thursday night that I met with, and they had about 600 people. And between that and different weekly events and networking events that I would attend, I would meet with close to about 1,000 people. And well, one of the things that I kept hearing over and over and over again as I was attending these different groups and, you know, networking with the individuals who are quote unquote successful, is they kept saying, find the deal and the money will come. And they just kept repeating it over and over again. And just as a reminder, guys, before I continue the story on how I got started and how I started raising money, don't forget to click that like button and also subscribe and give us a thumbs up, right? Because it honestly does support our channel when that does happen. It does support us and allows us to continue to provide free content for you guys. And I try to make as much of our content as free as possible. But thank you guys, appreciate it. I saw we got a couple likes as I said that. So thank you guys so much. I appreciate the support for this channel. So let me kind of go ahead and continue my story. So I was involved with these different communities, and you know, within these large communities, there will be these breakout sessions where, you know, about 30 to 40 people would get together, and there will be one person leading, you know, the thought process, facilitating the thought group, the mastermind, so to speak. And I ran one as well, right? I ran a mastermind group that had about 40 to 60 people every single week. We meet at 10 p.m. We go sometimes till 2 a.m. And I would train for 4 hours. It was great. But, you know, with these hundreds and hundreds of different people, everybody was kind of doing the same thing of finding the deals and allowing the money to come. Well, I was always the believer of the Warren Buffett principle. And it's a principle that I'm glad that I really embedded into my brain ever since I was, you know, very fresh in my career, very fresh. And the philosophy is that when everyone's going left, you go right, right? So again, when everyone's going left, you go right. And so everyone started looking for deals. So I was like, well, how can I be of the best value to people, right? A lot of these people have the deals and they don't have the money. That's the biggest problem. I got to solve that problem. So I started going on and I started learning about how to raise money. I read a book called Pitch Anything, right? It's a really good book by Orton Clough. So that's probably my number one book that I actually recommend to people when it comes to raising money. I read that. I read a lot of different books on how to raise funds. I read books on 401ks, self-directed IRAs. Read books on SEC regulations and networked with a lot of individuals. And I got really good at learning how to build strategic relationships, win-win relationships. And before I knew it, I was 21 years old, and I had over $2.5 million of private capital that was committed. That was committed to investing in whatever deals that I wanted to choose. So in that case, I started blaring that word out, right? I was like, hey guys, I have $2.5 million worth of capital that I invested, that's verbally committed, that's wanting to get into deals. And I announced it to the world. I told everybody, like even to the point where people got sick of it. And it didn't take much, right? I actually didn't have to tell a whole lot of people. And word kind of caught around, and it also helped that I was only 21 years old. And doing that, and so all of a sudden I started getting emails. I started getting about 10 to 15 emails a week from other individuals who basically said, hey, Daniel, I have a deal. It's a great deal. Here are the numbers. If you want to bring on the investor, if you want to raise the equity for it, I'll give you 25%, 30%. I'll give you 50% oftentimes. I'll give you whatever equity position for bringing that relationship. And so I realized that, what I had was power, because all 700 to 1,000 of these people were looking for deals, and there was only one of me that had the money. So as you can imagine, I became a commodity. I became a very valuable asset. People saw and people strived and fought to work with me, which is, not the most terrible feeling in the world. So I started looking through these deals, and I selected the 2 or 3 people that were the best investors in my opinion and had good deals. And that's how I kind of started getting into properties. And before I knew it, I learned very quickly because I was a partner on the deal. And because I was actually doing it and partnering, I learned at a very rapid pace. Very rapid pace. So that's kind of how I got started, and also kind of how I learned the value of being able to create relationships with individuals who want to invest in real estate with their capital. Okay, so we got a question that says, banks don't let you use HELOC as down payment on an investment property. What are the options in that case? Well, it's very ironic that we're talking about raising money because, well, a lot of my properties that I bought, especially apartment complexes, were through private capital. Now, if you want to use a HELOC, to collateralize and create kind of like a reserve account for that commercial loan or an investment loan or residential, whatever it may be, the banks will absolutely love you. They will, right? Because at the end of the day, the reason why they're not letting you do that, and 8 times out of 10, they will not let you do that, especially if it's with the same bank. They will not let you do that. You have to have a really strong pull or have ridiculously high liquidity and net worth for you to be able to pull that off. Right? But they don't let you do that because at the end of the day, what are banks about? Well, the banks for itself are a business, and they make their money by lending out money. Well, how do they lose money? By people defaulting, by people not paying what they're supposed to be paying. Now, how do they prevent that? Risk assessment, right? They want to prevent all the risks. So imagine, travel thieves, right? Cool name, right? So imagine travel. I'm just going to call you T for short. Imagine T that I was your bank, or let's switch it around, right? So that you can get a better understanding and a better perspective. So T, let's say that you were the bank and I was the investor. I was you in this scenario. Let's say that I wanted to buy, a 15-unit apartment complex. And let's say about 6 months ago that I got, a business line of credit from you for $200,000 in business line of credit. And let's go as far as to say that I secured it by putting $20,000 in an escrow or a reserve account. So it's a secured line of credit, not leveraged against equity in a home, but actually secured by liquid cash, right? So I put $20,000 or $40,000 in your bank account, get a $200,000 secured line of credit. And now let's say that I want to use your bank, right? I want to use your services to buy this 15 unit building. And let's say this 15 unit building, they're asking, $1 million, right? So they're gonna get 75,000 per unit. So I wanna buy it for $1 million. Let's say I go to you. So imagine I get a loan, I get a commercial loan for $1 million, and you're asking for a 20% down payment. So I'm gonna take that HELOC, and if I use $200,000 of that HELOC to pay as a down payment, do I really have any skin in the game? Yes or no? I don't. Excuse me. In that case, I don't have any skin in the game whatsoever because, well, that line of credit, is it my money? Yes and no. It's tied to the liquidity of my house, but at the same time, it's still not my money, right? I'm using hard equity in a property that's not liquid to leverage that and get a line of credit that at the end of the day is the bank's money, right? It's not my money, right? I can't hold that liquid cash in my hand and say that it's mine, right? So at the end of the day, the banks have 100% of the entirety of the loan. They're giving you $1 million for $1 million purchase. At the end of the day, they want to see some skin in the game. That's what they want. They want you to have some skin in the game so that they can manage the risk. Because at the end of the day, you could just say, oh, I default on both my loans. You can do that, right? And if that's the case, what's in first position? Is it the line of credit or is it the commercial loan? Which is it? So from the bank standpoint, right? So UT being the bank, if I used $1 million of your money to buy a bank and I put no liquid cash of my own, I have no skin in the game, you're gonna say, you're gonna be a little weary of that. You're gonna scratch your head and say, that's not, and in this case, it's a $20,000 secured line of credit, secured against $200,000. So I only have $20,000 in liability for $1 million asset. So imagine having $1 million asset and the worst thing you could ever lose is 20 grand. That's it. Right? So you as a bank, you're not gonna feel all that great about this situation. So at the end of the day, to answer your question, they just want to see some skin in the game. They want to mitigate their risk, right? And they want to be able to make their money too. Simple, plain and simple. Bill Allen, hey guys, don't forget to click on thumbs up and like the video. Thank you so much, Bill. Thank you, and you said thank you, Daniel, for all the amazing advice. Thank you for encouraging other people here in the Kwak Brothers to click on the thumbs up, like the video. Thank you so much, Bill. I appreciate the support. So, okay, so as you guys are putting in questions, why don't we go back to the topic of raising money? Because I'm getting the sense that a lot of people are here to do that. So obviously that's kind of how I started my career. I started building strategic relationships. And here's the one myth about raising money that I want to debunk right now, right? I want to debunk this myth. A lot of individuals, and I spent time, probably about 2 years, traveling around the country and training people on how to invest in real estate. And guys, I've met the highest of the highs, the lowest of the lows, right? I don't know if I met an individual who had a worse scenario when I first started, because when I first started, I was 19 years old. I had negative $187.65 in my bank account. I had a couple maxed out credit cards. I had very little income coming in whatsoever, and I knew nothing. I knew nothing about real estate investing. I didn't even know what a mortgage was when I was 19 years old, right? So I met the lowest of the lows. I met, individuals who were homeless, all the way to I met a guy who had a net worth of $500 million, right? Ended up becoming one of my lenders, actually. But I travel the country and I meet a lot of individuals. I train in front of thousands, in front of hundreds, and I have a lot of people coming up to me and asking me, Daniel, you say one of the things that you're good at is raising capital. How can I raise capital? How can I be better at raising capital? And typically, everything comes with a mindset shift. And again, I don't want to disrespect anyone, but it's notoriously known around my business circle that between Sam and I am much more blunt than he is. I don't mind being the bad guy, so to speak. Sam, nicest guy ever, right? Nicest guy ever. He's very sweet, super nice guy. If anything, I get mad at him about that because he structures business deals that just, are a little too nice. But regardless, neither here nor there. I have a reputation of being a little blunt. So allow me the opportunity to be blunt, because I think everybody, because at the end of the day, I don't say I'm blunt. I'm an advocate of truth. I love truth. That's what I want at the end of the day. I don't care about the emotions. I don't care about people's feelings. At the end of the day, I just want truth. So here's the truth. For individuals that are asking me, Daniel, how do I raise capital? How can I be better at raising capital? They have the wrong mindset, right? They have the wrong mindset. Because in all reality, if you are a true entrepreneur, if you are a true real estate investor, and you're out there and your mindset is focused on how can I provide value for the most amount of people out there, right? So you're out there networking with people first off, right? So you're always out there meeting new people. You're always looking to solve their problems, and you're always looking to provide a solution. You will not, I repeat, you will not have any trouble raising money whatsoever. If anything, you will have money come to you rather than you trying to raise capital. That's what happened to me. I never went out, actively looking for specifically investors. No, for me, I've always been an advocate of identifying the people and solving their problems. So what do I mean by that? How does that convey to raising money? Well, if somebody's asking, Daniel, how do I raise money? What are they focused on? They're focused on I. How do I raise capital? How do I raise money? How do I do this? How do I do that? It's not about you, right? It's not about you whatsoever. If you're an entrepreneur and you're thinking about yourself, you are not an entrepreneur. You are a wantrepreneur, right? You are no different than the individuals who, they join an MLM company and all of a sudden they call themselves entrepreneurs, right? That's just not true, right? That is just not true at all, So for individuals that want to raise capital, start taking the I out of the equation and start asking, how do I provide the best value for other people? Because, well, I've trained a lot of students, right? I've trained a lot of one-on-one clients, and the most successful one-on-one clients are the ones that go out there looking to solve other people's problems. Now, granted, a lot of my one-on-one clients are like, Daniel, how fast can I reap the results, right? And typically when I hear that question, I know I have to work a little bit about their mindset first before we start getting into the technical stuff, right? That's just the way it is. You can't pour, right? And there's an ancient teaching, right? There's an ancient teaching by a very wise teacher that says you can't build a house, on sand, right? You have to build a house on a solid foundation if you're going to build a house, right? You can't build a house on sand because it's gonna wash up. You gotta have a strong foundation. So let's tweak the mindset a little bit. And when it comes to raising money, when it comes to raising capital, we gotta start changing the mindset of how do we solve people's problems? Because if you're out there networking, guess who you're gonna meet? You're gonna meet individuals who have this problem of, I have a lot of money, I have liquidity, I wanna get into real estate, I just don't know the right person to invest it with. Why can't you be that right person? And let me ask you guys a question, right? And feel free to answer this question in the comment section below. I'm trying to increase the engagement here because at the end of the day, I hate being the only one talking. I really do. It makes me go crazy. I honestly think if I was the last person on earth, I would probably, realistically speaking, I'd probably commit suicide because I just can't bear to live without other people. But, answer this question for me, right? It's a yes or no question, right? But answer it, please, in the chat box below, right? We got a lot of people watching right now, but please answer this question. Do you think there are more people who have money who want to invest in real estate, or do you think there's more people who actually know what they're doing in the world of real estate investing, right? So it's not a yes or no question, right? It's more of who's who. Are there more people who have money who want to invest in real estate, or are there more people who actually know what they're doing in the world of real estate investing? And not only that, not only do they know what they're doing in the world of real estate investing, but they have integrity, they have morals, they have ethics. Because I meet a lot of people in my walk, right, who know a lot about real estate investing and aren't the most ethical individuals, right? They embezzled money, they commingled funds. They, will say, well, this expense is for this, right? I've met individuals who run a company who they'll literally pay personal things out of the business account, literally pay their family members a ridiculous amount of money every single month for doing a simple job that only takes an hour a week, and they get paid $3,000. It's just something ridiculous. So answer the question, right? Are there more people with money, or are there more people who actually know what they're doing with ethics, right? More people. Thank you. Right. Exactly. T unknown anonymous. So UA right asked, and that's absolutely right. In my walk of life, I would say that there's probably for every 100 people that have money that want to invest in real estate, I would probably say there's only about 2 or 3 people that not only know what they're doing but have the integrity to back it up. Right. Robert, Daniel, what do you think about this deal? Robert, I don't see a deal. Is it like under this table? Like, where is it? All right, California is so expensive to buy properties. I was thinking about another state. 2 places I was thinking: Nevada, Iowa. Not shabby. Depends on what you're trying to do, and it also depends on what demographic you're trying to reach. So, if you're trying to buy and hold, then I would say some good places buy and hold. Well, it also depends on what you're going after, right? Like, are you going after 3-4 units? Are you going after 25 to 50 unit buildings? Are you going after 100 plus? What are you exactly going after? If you're going after 100 plus, I'd say great places to go after will probably be places like Indiana. I would say around the Charlotte area, Florida, Colorado, Tennessee. Yeah, based on my research, those are good places to start. Ohio, phenomenal place too, especially like Columbus, Ohio area. Great place, really great place. If you're going after 100 plus, I say buy and hold in general. Those states that I just mentioned, especially if you're talking about multifamily, so anything 5 units and up, I say those places are really safe bets right now. I am not buying a whole lot right now. A lot of people expect that I go after 100 plus unit apartment complexes. I don't. I'm not buying them. But I'm taking advantage of the individuals that are buying a lot of them. So I'm wholesaling a lot of 100 plus unit apartment complexes. So yeah, that's what I'm doing right now. So I'm not a huge part of wholesaling. I'm not a huge fan of wholesaling just because I'm not overall, guys. My investment philosophy is I like thinking long term. Anything short term, I'm not a big fan of. So like wholesaling, like Airbnb rental arbitration, I'm not a big fan of that. Just because for me personally, I like building equity. You study the most wealthiest individuals in the world, and the most common advice you hear is build equity, buy equity, so to speak. What parts of Indiana? I'd say, northern Indiana is a pretty safe bet. Just because I live in Illinois, and this, I'm a local, and I know a lot of individuals are moving to Indiana. Matter of fact, if you drive from Chicago to Indiana on like 294 South Indiana Expressway, and you take 80, the major highways going into Indiana, if you're in the Midwest area and you live in Illinois, take that drive sometime. You'd be shocked at the amount of development that's going on, especially in that border of northern Indiana between Illinois and Indiana. I feel like I said Indiana for like Indiana. Right. Why Colorado? It's so expensive right now. Yeah, the only reason why I say Colorado, and the reason why Matt, you say it's expensive, because if you look at on market, yes, it is expensive. But I always say in a market like this where everywhere is expensive, like California is expensive, Colorado is expensive, Florida is expensive, everything is expensive, right? Even this shirt was expensive. I got this at H&M for $15, and I was like, what? It's a little too expensive. Everything's expensive, right? But if you get something off market, I think you'll be fine. Just be smart, buy according to market cap rate, and I'm not talking about the current market cap rate. I'm talking about a 5-10 year span. Yeah, look at that. Robel Caltiso, ARV 300,000. Okay, so this is a deal. Do me a favor, Robel. Email me at info@thekwakbrothers.com. And I'll take a look at it. right? Info at thekwakbrothers.com. So info at thekwakbrothers.com. And hey, Chris, can you type that in the chat box?
Sure.
Thank you. So info at thekwakbrothers.com. So even if you just want to say hi, you want to say hi to me, just email me at info@thekwakbrothers.com. Typically, after I get off the live sessions, I typically head right after to lunch. Another thing somebody asked me was, what does my typical day look like? So why don't I address the questions here? I'll talk about what my typical day looks like, and then we'll go back to the raising money topic. Buying opportunity zones. Not all the time. I would respectfully disagree with you on that one, Ingrid. So yeah, opportunity zones are great, but I actually did a lot of reading on opportunity zones because it's such a hot topic when it comes to real estate investing. It works 30-40% of the time, but the 50-60% of the time, it actually ends up hurting you rather drastically. And you get put in a position where it's very dangerous. So yeah, don't buy it just because it's in opportunity zones. The government and municipalities are very clever in creating the concept of the opportunity zone. So for example, in my hometown of Chicago, which is the greatest city in the world with the greatest basketball team in the history of the world, in Chicago, they have a lot of opportunity zones because obviously it is known that the south side of Chicago is a little beat up, right? Like you got Chicago and you got Chirac, right? But a lot of opportunity zones are there. And what they basically do is that based on how long you own the property, they give you cuts in capital gain. Here's what a lot of people do not understand. You don't even get taxed on capital gain unless the value of the property goes up. If you sell the building, which by the way, the only tax advantages of having properties in opportunity zones is primarily when you sell the building, right? You are exempt from capital gains depending on how long you own it. I think if you own it for past 8 years, you get 100% deduction and capital gain, so to speak. But you don't get that unless the value of the property goes up, meaning that unless the city wins first, you don't win at all, right? So if you buy a property for $100,000 and it doesn't appreciate, it actually goes down in value, guess what? You lost money in every single way possible. Not only losing money in value, but you also lost money in average cash flow probably. You lost money in repairs because it's a crappy area, and what a surprise. Gang members broke in and stole your copper. Happened to me on my property that I had in Chicago. And you're gonna lose money. And that happens 50-60% of the time. And usually the gentrification takes a long time before you're able to take advantage of those capital gain deductions. And you gotta own those properties for 8 years. And typically the individuals that buy in opportunity zones are the ones that are looking for tax advantages in the first place, i.e. your doctors, your salespeople, especially in the medical industry that make a lot of money, a lot of individuals, period, that pay a lot of taxes. I've got a lot of investors that are doctors. I probably specialize in having doctors be my investors because I know the doctor's financial situation in and out. I know how much they get taxed. I know what exactly they're looking for. I know exactly what type of assets they should get into. I probably work with doctors probably 50-60% of the time in the investing world. So I give them 100%. I will not do a deal with a doctor unless I give them equity in a deal because I know they're going to want that depreciation and the losses as often as possible, right? As often as possible. So buying opportunity zones, not all the time, right? So Robel, okay, you're going to email me right on. What about buying whole single-family homes in Las Vegas, Nevada, or Des Moines, Iowa? So, not a big fan of Vegas right now because of that philosophy of, when everyone's going left, go right. I feel like a lot of people are buying into Vegas. Des Moines, Iowa, yeah, I can see that because I think there's a university there. So I'm not opposed to that at all. But when it comes to single-family buy and hold, man, that's tough. I'd say some of the best. Yeah, I'd say Columbus, Ohio is pretty good. I I mean, I don't know. Single family houses they're much more unique. It depends more on your business plan and how you run it than it does on the market, so to speak. When you start getting into apartments, that's when you start have to paying attention to markets a little bit more. But with single family house, I know it depends much more on the individual. Matt Smith asked, where do you find your off-market apartment? So there's a lot of different ways that I go about it. So one of the ways that I talk to is I actually talk to the mailman. And it's actually not a joke. I actually do talk to the mailman because they know the neighborhoods really well. So they know who's selling, they know who's trying to not sell, so to speak. Another one I use is I do use a couple softwares in which I do find off-market deals. I also utilize wholesalers. I also utilize for rent signs. So I'll go online to like Hot Pads and I'll skip trace the owner's info and I'll do mailing campaigns. I'll cold call them. And it helps too because, you know, I'm not looking to wholesale those apartments. I'm looking to buy them myself. So typically owners are much more receptive. Like I know if a wholesaler called me, I'd be like, all right, you know, I'll try and limit the amount of time that I give to them. What's the best way to get rid of squatters fast? Have a great attorney. Have a really, really good attorney or a really good property manager. But yeah, attorney's number one. Have a good attorney. Your opinion on Airbnb and why? Okay, so Airbnb is really interesting. And before I answer that question, guys, I know we probably have a new set of people. So again, just a reminder to click on that thumbs up button, click on the like button, give us a thumbs up, subscribe, because it really does help us, guys. When people put a thumbs up on our videos, it helps us to keep this thing going. It also makes me realize, you know, that you guys are actually there and listening. You know, because a lot of times, you know, sometimes I'll be here, I'm like, man, is this advice even worth it? You know, are people even going out and using it? So when you guys thumbs up this video, it really helps us kind of give us some feedback that what we're doing actually matters, you know. My opinion on Airbnb and why. Okay, so I say Airbnb is one of those things where it's still relatively new to the real estate investing game. And first off, I don't think it's a real estate investing strategy. I think what you're doing is a hospitality. It's a hospitality business. I don't consider it a real estate investing strategy. Because typically with landlords and real estate investing, it's what's the bare minimum that I can do to get as much rent as possible. You can't take that approach in the Airbnb world. You can't. You have to provide a 5-star experience. You got to go above and beyond because it is a hospitality business. And at the end of the day, you are competing with hotels. So you are competing with brands like, you know, the Westin, with, you know, Marriott, with, you know, La Quinta, with, you know, Holly. I don't know. You know, there's a lot of hotels out there. But at the end of the day, you are competing with those nice hotels. So, you know, it is a hospitality business. I think it's a great opportunity right now. I think it's a bit of a wave. I think it will saturate itself eventually, and you won't have as many people that are interested. And I think eventually it's going to fizzle out. I think people are going to make good money like anything else in real estate. There will be individuals who amass a rather large portfolio and enjoy a very large cash flow. Now, it is a little bit more hands-on, but I think overall it's a great opportunity. I have Airbnb properties that I currently cash flow a lot from. You know, we got one that we cash flow rather well. I think we cash flow like around $4,000 or $5,000 a month. So it does very well for ourselves. You know, it does very well for us. It's very good. Do you have money in the stock market? I don't, because my philosophy is I don't invest in things that I can't control, because if I put $20,000 in the stock market, I'm basically putting $20,000 in a company in which I have no access to their boardroom. I don't know any of their employees. I have no say. So I don't invest in things I can't control. Sorry. All right. T, welcome back, T. Multifamily, 4 units or less versus single family home for first time investor. Pros and cons, why one is better than the other for another. I always say go with the 4 unit. If you're looking to be in real estate for a very long time and you're looking to scale, I say do 4 units. But if you're an individual that likes taking things slow, likes to build equity, likes to go at a little slower pace, you know, I say go with the single family. You know, it's more of up to your speed. My first deal was a portfolio of 4 single family houses, and immediately right after I bought an 8 unit. there a recommendation on how much money I should spend on a buy and hold in single family homes? What's too much in profit margin? So Steve, there's so many different markets out there. It's really hard to tell. And also so many different homes. Like I said, again, with single families, it's so much of a wider spectrum, right? With apartment complexes, you got class A, B, C, and D, and it's typically more predictable with certain markets. With single family houses, it depends so much more on the individual, on the investor, on how good are they at being a landlord? Do they do the work themselves? What amenities do they provide? It's so much more on the investor. On the apartment complex side, it's much more easier to obviously hire a property manager, much more easier to predict the rental market, to predict the value of the asset. A lot of things are much more predictable. But with single families, it has much more to do with the individual. But I say on a single family, to kind of answer your question, that last one, I'd say a good profit margin on a single family home is if you can cash flow at least $250 a month. If you can cash flow at least $250 a month on a single family house, I'd say you're doing pretty well. Now, if it's in an area where it's very distressed, yeah, 250 is good. If it's in a decent area to where you're getting $1,500 to $2,000 for rent on a single family house, and I've looked at deals where you can get $2,000 a month or $1,600 a month in rent, and the house costs $95,000. Typically those are like your Hispanic neighborhoods, to where they pay rent, they're able to do it because a lot of them work blue collar jobs, but at the same time, the housing is relatively cheap for you to buy. So, yeah. I say profit margins 250 if you're in that region, cash flow 500 to 1,000, so to speak. But I say minimum 250. Yeah, minimum. Do you think this market cycle almost tipped over? I think this is the last summer it will be hot. Yield curve inverted a while ago. Election coming up, market's going down. What are your thoughts? So historically speaking, when you look at the fourth year of most presidencies, it's typically positive. I think in the United States history, we only had 3 presidential terms in which the fourth year was a negative in the economy in terms of GDP going down. I don't anticipate that happening with Trump. I think in the fourth year, we're still going to have a bit of a seller's market. Market will still be hot. I know we just had that huge sell-off where we dropped 700 points in the Dow because of trade rumors and the Chinese currency being a lot weaker. President Trump putting a lot of pressure on the Federal Reserve to cut rates even more than what they did, which is 250 basis points in July 31st. But I think we're still going to have a hot summer. My anticipation is I think we are going to have a little bit of a correction in 2020. I think eventually, though, we are going to kick that can a little down the road. I do see a lot of quantitative tightening going on right now. But I think I'm just really curious to see what's going to happen with this trade war. I think a lot of things are up in the air right now, which is why I'm raising a lot of capital. What's the minimum cash flow you accept on a buy and hold rental and why? I think I kind of answered that question already with Steve's question. So on a single family house, the minimum cash flow I receive is $250. On an apartment complex, it's $150. I am new. Hello, Steve. New. Steve, you've been on our live before. I recognize your name. I did get a refi to get cash out for investing before listening to you guys. I should have done a HELOC. I still have about 25% equity. Okay, so 25% is no. Don't do a HELOC with the extra 25%. Hold on to that 25% in equity. Hold on to it, please. Hold on to it. Hold on to it. Now, Steve, you're new. So do me a favor, email us at info@thekwakbrothers.com. We actually have a lot of free resources for individuals that are new to real estate investing to help you out. So email me at info@thekwakbrothers.com. Chris, can you do me a favor? Can you type in the chat box again, just so that Steve could see it? But yeah, Steve, email me at info@thekwakbrothers.com, and we got some free resources for you. Ingrid said, when your single family gets laid off, you're more likely to be paying the note for 1 or 2 months. Not so when you have a multi-family apartment complex. Yeah, absolutely. Totally agree. Yeah, so even with the single family, that's why I always say have a co-signer. That's why I like families, because typically if it's a husband and the wife, they both work, and especially if they have kids, they typically do have a liquid reserve, to be able to pay the rent, so to speak. But yeah, good point. Thanks for bringing that up, Ingrid. Matt Smith, do I do the 1% rule for cash flow? I don't use that rule. So I know there's a lot of rules out there, like the rule of thumb, the 1% rule, the rule of 72, the rule of 8. There's a lot of rules out there, right? And I know them. I'm familiar with them. I do not use rules for me personally, right? So if others do them, that's great. But for me, I don't, because, it's a great rule of thumb. But at the end of the day, like, every deal is different. Every deal is super unique. Every seller situation is unique. So I don't like to use rules because it prohibits me from. It's like training wheels. Like you can't truly be a good biker if you have training wheels, so to speak. It's preventing you from being very good, so to speak. So it's good for riding a bike if you want to be, stay at that level, I guess. But for me, it's like, it gives me reason to not go into the deal in terms of the specifics and the details and treating it as a unique situation, so to speak. And I also think it's a little lazy, like just run the numbers, right? Like run the numbers to see if it's a good deal and build your intuition rather than relying on a standard of rules to determine whether it's a good deal or not, right? Have you partnered with family or close friends on any deal? How did you structure it? How did it turn out? Yeah, so I partnered with a family friend. It turned out decent. I don't think it's any different. I think you should. But even my investors, my lenders that I do work with, I treat them like family. So I treat them as if they were my brother or my sister. I treat them very well. So again, guys, another reminder to give us a thumbs up. Really would appreciate that. And also some announcements I'll knock out. We still have the free owner financing course available. I'm thinking about doing a free course on another subject. Maybe we should be on raising money. I don't know. But going back to the topic on raising. Oh, I forgot my daily schedule. So a lot of people ask me, what does my daily routine look like? I am the most inconsistent person that you will ever meet. There are days where I wake up at 5 a.m. and I start my day and work. There's days where I wake up at 8:30 a.m. and I go and do the same thing. Last night I was up till about 3:30 in the morning working, looking at potential nightly rentals and also kind of just being on my phone reading articles. I don't sleep much, if I'm going to be completely honest with you. Not much of a sleeper, but typically my typical day, if I were to average it out, would be I wake up around 7:30 in the morning, right? And first thing I'll do is usually hit the gym. I come back, I read my Bible, spend time with God. I usually go into the office, get some busy work done, check my emails. And one of the best things that I started doing, if you guys want to be efficient, so for those guys that are health conscious, you love to hit the gym, one of the things that I started doing is I stopped listening to music in the gym, because I'll be in the gym usually from an hour to an hour and a half, depending on what I'm working on. But for an hour and a half, I'll listen to podcasts. I'll listen to real estate news. Some ones I really like are the Best Ever Real Estate Investing Podcast by my really good friend. Not really good friend. He's a good friend of mine. Joe Fairless. He's a really good one. I listen to Real Estate News with Kathy Fedke on Spotify. I listen to NPR, How I Built This. I listen to a couple other podcasts, and I also listen to specific people. Good YouTube channel I listen to is Investors Archives. Is a good YouTube channel I watch. Money GPS is a channel that releases a lot of videos on the market, what's going on. I listen to ACDC Economics on YouTube. That's a really good one. I'm not a huge fan of a lot of real estate investing channels out on YouTube. I just think a lot of their material is very watered down, and I walk away kind of really feeling like I wasted my time. So if I feel that way, I'm certainly not going to recommend channels like that to other people. But yeah, and then in between my sets, I'll check my emails. So I'll knock out 15, 20 emails in my workout and save myself 20, 30 minutes every single day. And so I come back office, and I usually have meetings between 10 a.m. to 3 p.m. is where I have a lot of my meetings. Lunch meetings, meeting with sellers, lenders, partners, whoever it may be, or people that I'm pouring into and mentoring. And then usually from about 3 to 5, I'll take a little break. So I'll go home, I'll read, I'll play video games, or not video games because I don't own a video game, or I don't even own a TV. But I'll just kind of be on my phone, I'll watch YouTube, things like that. At 5, I'll usually eat dinner, and then from 6 to about 8, 6 to 8, typically, I'll do a little bit more work, and then I'll go to church for an hour, because there's a lot of things that my church does on the weekdays at night. And usually around 9:30, I'll head back to the office, be here till about midnight or 11 o'clock. I'll usually drive back home. It's about a 15-minute drive, get something to eat, and I'll usually work till about 2 a.m. It's typically my schedule. Do you have any recommendations on books? Yeah, I do. So Pitch Anything, really good book for raising money, which is the topic for today. Pitch Anything, Think and Grow Rich, phenomenal book. Ground Rules by Warren Buffett, Intelligent Investor by Benjamin Graham. A lot of books I read. I like Investor Mindset Podcast and Ed Mylett. Yeah, I'll check that out. Thank you so much, Matt. What is your opinion on residential assisted living? Yeah, so I know the baby boomer population has driven up the demand for residential living. I know you have to have a lot of liability. I got a buddy of mine who's into that. I don't have an opinion on it because I've never done it. So I'm not going to speak on something that I've never done. It's just me personally. Matt Smith, what is your why? It's simple. It's to spread the love of Jesus Christ, which is unconditional love and grace, to as many people as possible, and also provide at least 51% of the value in every single transaction that I have. So, yeah, to give, and more give. Thomas Booker said Napoleon Hill, very good book. Yeah, absolutely, man. It's probably my top 3 in terms of books I recommend to entrepreneurs. I love it. Absolutely love it. Really, really good book. I'm really getting into a lot of Ken Fisher lately, the billionaire investor. I'm reading his book on right now called The 3 Questions That Truly Matter. I'm reading that one right now. Really good stuff, Ken Fisher. Really good stuff. So let me close this out and let me add in 1 or 2 aspects about raising money, because that is a topic I want you guys to walk away with something. One of the best ways to raise money is start a meetup group. So be a facilitator of a thought environment. So you don't have to be the one that knows everything, but even starting a meetup where you run it and you have other people speak, a lot of people will come up to you and throw money at you. I've raised $800,000 in terms of deals that I've actually done through having meetups, through running mastermind groups and running meetups. I think that number is up over 1 million now, but it's over 1 million. These are deals that I've actually done, that capital that I've actually used for deals that I've gotten from running meetups and running masterminds. So my real estate tip of the day when it comes to raising money is start a meetup, right? Start a mastermind group. And if you guys want more information on how to do that, I ran a lot of mastermind groups before. The largest mastermind group that I ran was around 100 people. The smallest mastermind group I ran was 5. So I've kind of been there, done that in terms of running mastermind group. I've run them now for 2-3 years, and there's a lot of pointers that I feel like I could give. A lot of mistakes to definitely avoid, like how to grab the most people and how to really monetize a group. So if you want information on that, info at the Kwak Brothers. Email me at info@thekwakbrothers. So Chris actually typed it in the chat box earlier. Email me at info@thekwakbrothers.com, and I will reach out to you, or I'll have somebody else reach out to you on how to do that, on how we can coach you and give you resources to do so. Even if you want to just email me to say hi, absolutely do it. And again, guys, to kind of just close things out, don't forget free owner financing class. Go to thekwakbrothers.com, click on free stuff. We got a lot of really great things in there for you as well. But I want to thank you guys for joining me. It's around 11:50, so I'm going to close out. I know we were live around like 10:55 or 10:59, something like that. So thank you so much for joining me, guys. I'll see you guys next Monday for real estate investing live Q&A. The topic will be owner financing, right? I've decided right now we'll talk about seller financing, owner financing. That'll be a topic for next week. But of course, all questions are welcome. So thank you guys so much. I'll see you guys next Monday at 11 a.m. Central Time.